So good afternoon for this lecture. Alright, welcome to the part 4 and continue for microfinance and credit services in support of small-scale fisheries in Asia. So this one, we got this guideline and sharing about its services. For this case, fisheries, okay? So as depend on these guidelines built on previous related guidelines prepared by the FAO, including above, it's mentioned that management guidelines, this one is for removing launch funds and credit programming for fishing communities, right? And B, we have guidelines on microfinance in fisheries and aquaculture and credit. Then guidelines on microfinance needs in inland capture, fisheries development and conservation in Asia. So we have this. These documents continue to serve as useful references for the current guidelines that specifically address financial service that they provide for small-scale fishers, or we can say that like a short form as SSF. These previous guidelines highlighted a need to conserve and manage fisheries and identify opportunity for fisheries development, conservation, and financing. So these documents identify target groups and their credit when the microfinance needs, even launch size and launch proposed, interest rates, and repayment periods. Okay. Documentation and collateral requirements, as well as the need for savings and insurance services. But at the end, the previous guidelines, acknowledgement, the role of variety stakeholders. Okay. The organization, financial institution, and donors in providing financial service and in managing and conserving inland. So this guideline document intends to build on these still valid frameworks with the objective to modernize and update the recommendation to view of rapid developments in both the fisheries sector's context and the rural credit and microfinance industries. So we can see here the purpose of this guideline is the fourfold as. The first one is increase awareness, right? So how they increase about this? It's about the financial service needs of small-scale fishers for more sustainable and inclusive access to finance. And the second one, guide policy and decision makers. This is showed us in the Asia Pacific region and elsewhere to help introduce and incentivize financial services to small-scale fishers, with the ultimate object to encourage investment in the industry and by doing so influence and strengthen sustainability to ecological and economic viability of these fisheries. So the third one, we have build capacity. Okay. Build capacity as among financial service providers, fisher folk organizations, even NGOs, and concerned government agencies to design and implement financial service products and programs that suit the needs of small-scale fishing communities and enhance social protection. And then the fourth one, promote financial services that incentivize and reward a responsible, even sustainable conduct of fishing, right? And then fish processing to doing marketing operations. So after the purpose, we got the guideline for to contribute to other 2030. Right, we got here is a SDG, stand from sustained development goals, right? Between these guideline for increasing access of small-scale fishers to microfinance and credit services also aim to contribute to the achievement. Okay. It said that the goal 14 that conserve and sustainably use the oceans, seas, and marine resources for sustainable development. This financing investments in sustainable fishing practice will specifically target the 14th, that it provide access to small-scale artisanal fishers to marine resources and markets. So we got the first. How is the meaning that talking about for this? Okay. So the goal one, we got this. This one is the goal one. Okay. Goal one said that this one is for end poverty in all its forms in everywhere. Don't have the poverty even in the inch of area. Okay. And the next one here. The second goal, it means that end hunger, achieve food security and improved nutrition and promote sustainable agriculture. Right? And then we have here the eighth goal. It said that promote inclusive and sustainable economic growth, even employment and decent work for all. And the next one, got the ninth one here. To build a resilient infrastructure as promote inclusive and sustainable industrialization and foster innovation. Okay, and here the 12th goal, to ensure sustainable consumption and production patterns. And the last one, the 13th goal as to take urgent action to combat climate change and its impacts. So this one is show that to conserve and sustainably use the oceans, seas, and marine resources for sustainable development. Then we have here the risk management specific to small-scale fisheries financing here. Alright, first it said that appropriate product design. Okay. As here, then proper screening of clients and business to understanding of a value chain in which entities operate of small scale fisheries. Okay. Then here they also like doing portfolio like that to diversification that among the monitoring of environmental events and an operational strategy to contend with risk events both systematic and non-systemic if and when they take place. Alright, so now we got the and see the risk, every risk that they have mentioned about this. Then that why is coming as question, why are microfinance and credit not targeting small-scale fisheries in general? It said that underlying any extension of credits is the business itself and is prospected as the first of fisheries sector can be an attractive sector. It means that to invest inform a portfolio growth perspective, but in part because so little formal finance has been extended, leaving an untapped market for credit and other financial services. The reason why is for not targeting or not including SSF in fisheries. Credit programs can be of operational nature, have to do with capacity, have a political or regulatory background, or be a combination of those, as operationally to expected returns on investment may not be as high in SSF. May I say SSF, okay? Then just understand that SSF, it means that small scale fisheries. Okay, as in other sectors, like a small scale fisheries may have a relatively low investment capacity. So because of that, they also have the limited access. The maybe it depends on geographical dispersion and coastal communities. And the related challenges to reach them can be constraining factors, as the latter adds considerably to the transaction cost of credit delivery in the past. And then in terms of capacity, in the infrastructure capacity as well as technical capacity and training. So both of them at the financial services provider as a supply side, right? And among the features here we call that demand side. And there often is not sufficient to deliver credit successfully to small-scale fisheries. Social inclusion and in some cases, as the stigmatization of fishers also contributed to their exclusion from many rural credit programs. So moreover, the institutional construct and capacity in fishing communities with often losing. Organized growth and few formal organizations did not contribute to effective credit supply to the fishing communities. And here we are going to talking about the political and regulatory frameworks. So sometimes it make credit supply to fishing communities not attractive. Why I say that? Political and social interferences are common as like regulations in place at national level often to sometimes not reach coastal community, with consequently weak regulatory and other contract enforcement. So that's why on top of those common constraints, the literacy among fishers, as well as their vulnerability to risk and their limited power within the value chains, make the small-scale fishery sector not an attractive sector for targeting micro finance and credit services. So we got here the risk management as I mentioned before, and then now we get the comparison between agriculture and small-scale fisheries business character. That as their comparison between them, we have the main or the core characteristic as the first. Here we look at this. Okay, and we can look at all of them here. All right, so this one. So depends on this, we can compare as like a key business drivers, key risk, okay, and key operation inputs to finance and funding characteristic organizations and organization value chains characteristic. So between of these character, we can compare at the same character between agriculture and small fishes, right? And then we got here for the agriculture, it said that, okay, for key business drivers, agriculture mentioned that like policy, crop technology, and system, right? Like a rain feed versus the irrigated. But for the fishery, they also something talking about the yield, quotas, management plans, and also regulations, policy, and technology as well. But for the second one, key risk, agriculture, they have with climate change, market price, government policies, crop disease, and pests. And for the fishers, they have market price, weather, seasonal ebb, and flows like declining stocks, transboundary resources, and migrating stocks like a fishing equipment, right? Failures and climate change as well. Then we have the third one is coming up with the key operational inputs to finance. Agriculture, they have cash flows and technology capacity at financial institution. But for the fisher section, also cash flow as well, but there is also technological capacity at financial institution. Then we got the funding characteristic. Agriculture, it's into the short term. Okay. For input, there also can be long term for equipment, farm purchasing, and certification. While fisher sectors, They have the short term for input such as like ice, fuel, labor, gears, long term for equipment vessel, and engine purchase and certification. An organization, we have the fifth one here. Why agriculture, they have like association, corporations, groups, right? And yes, for the fishers, they also have like association, community, corporation, and also group. And let's see the last one. The sixth said that organization value chain characteristic. In agriculture sector, is very varies that depend on the crop, right? And context to the end market. It's mean like destination, end of consumer point, like that. The country and culture that dependent. While the fisher sectors, they also have like varies, and but they mention and focus on local consumption. Okay, like perishable and export driven items will usually have more constructed value chains, like within country and culture dependent also. So because of that, the social and environmental, they have the why the mandate why in the for profit, right? It seems like a banking, financial companies or institution, these mandates may be their subsumed to profit motive or positively influences to emphasize for responsible to small scale fishers finance that including the development of new markets and outreach. Alright, and here we got showing that the actors involved in small scale fisheries finance. So because of this, it said that the first is demand for microfinance services. Okay. Second, supply for microfinance services and multifunctions actors. The last is enabling environment actors. Okay. So for the first one, at the level of microfinance, the demand side who? Fisher, right? Demand side is made up of individual fishers and often fish fork group, formal or informal. It's like the rank of individual recurring finance involved in the sector is broad, like and settles not only type of fisheries industry, but also vertically among actors in a value chains. For example, one thinks of a fisher as a person with a boat, but in reality, there are many small-scale actors within that value chains which may have demand for finance, such as small fish processors, gear makers, small shipyards, workshops, forward store or engine repair, wholesalers, packagers, traders, retailers. So treat with their activities, characteristic, and financing needs. Fishers may have either groups like two consisting solely of fish folk or mixed groups. Because of this group can be formal or informal, and when applied managed can act not only to provide technical services or market linkage to members, but can also be a contribute for finance to members while also requiring finance for their own activities. Okay, second one we got supply for microfinance services. It's showing as like a formal supply. Okay, formal supply of financial services for fishing can rest in the hands of governments, like governments or states, some state like financial institution, public or private rural banks. Okay, and microfinance institution, which could be for profit or non-profit entities, while other direct suppliers of microfinance for SSF could be producer, fisher, cooperatives, village saving or launch association. And even that, they also have like there are self-help group or other forms like self-managing saving and launch groups. While government financial institutions can be key providers of financial services for small-scale fisheries in Asia, particularly, and can be have extensive outreach. Okay. So this we also have like a case from banks such as in Thailand and Land Bank in the Philippines that they have the mandate to serve the small-scale fisheries. And for the section of government financial institution can effectively finance small-scale activities as well to support government policy related to the fishery sector, but are sometimes hampered by inefficient process, politicization, and erratic funding, leading to an inconsistent and bureaucratic supply of financial services. So rural banks usually have well-established outreach and may be either public and privately owned. These banks can be highly effective providers of microfinancial and credit service to small-scale farmers as well as fishers. However, the orientations of management can prospective for sustainability determine generally and scope of financial service and offer as like offering depending on their jurisdiction. Some can provide a range of financial services, including savings, money transfers, different forms of credits, which may non-government organization may not be able to provide. The microfinance institution also can be categorized into not-for-profit and for-profit entities, but for-profit entities are usually sustainable providers of efficient financial services for small-scale fisheries, but are more suited for profitable and growing for this group clients that depending on their jurisdiction and legal structure. Some microfinance entity can provide a broad range of financial services, including savings, money transfer, and different credit products. Non-profit may not be as consistent in service provision, nor do they offer the variety of services as for-profit. Okay. And they often suffer from scarcity of funds. Right, and then we got the third one. The third one, multifunctions actors. Here, the organization who play in this finance, okay, of the fisheries includes business within these group value chains like buyer, exporters, packers, or purchaser, wholesalers, retailer, and input as like equipment supplier provide critical links and serve in every moment, like they have to transfer movement of value-added products in the market. So at the time, these actors play the role of finance, like they are the financer, like supply, right? The supply side. This group also working as capital finance comes from wholesalers or buyers from the small scale finance, like fisheries. Yeah, this financing and service providing a relationship. For example, it seems like the Suki in the Philippines and Dadon in Bangladesh is often a credit marketing linkage at its most basic form. This relationship provides in fisher. They only provide for fisher only. So this supply side with a currency outlet for his or her fish and access to working relationships can often be seen in varying degrees in value chains throughout Asia. Right, the next one. We got the fourth one, like enabling environment actors, right? So this is the last one. These actors, they all relate with the laws, regulations, policies, and international treaties serve as the constructural basis for the country's ability to achieve and sustain market-based development in the fisheries sectors. We can example as of common legal framework challenges choose here, and including restrictive laws, regulatory gaps, okay, unforeseen consequences, and unpredictable rule. So lack of credit can be one of the greatest barriers hindering sustainability of the fisheries sector in developing countries, right? An enabling environment for credits is no more general applied. As example, any one sector is not distinguished or differentiated within the laws. However, certain industry sectors and activities to be financed can be more affected than other by upset or present of regulations or laws. Example again, in financing equipment such as vessel, engines, and other small-scale fisheries, fixed access. The use of this equipment as collateral legally required existence of a secured transaction. About transaction law with associated registry. This does not exist in many countries in Asia, but therefore limited in forms of compatible, collaborative, collateral, and reduced credit supply to this sector. The existence of government regulations also directly a minimum percentage of bank credits to certain sectors may stimulate like lending, right? Example again, in Bangladesh, India, Indonesia, and also Philippines, banks are required to dedicate a certain percentage of credit to agriculture sectors, including fisheries. However, fisheries as a sector is often subsumed to agriculture, and many banks overlook it in fulfilling their commitments in this regard. Setting requirements for fisheries finance and specific requirements around reporting of fisheries finance may assist the sector to access credit services. Right? So this one is all about actors involved. In small-scale fisheries finance, we got the 4 actors, as I mentioned and explained before. For more detail about here, key good practicing in delivery of financial products and services to small-scale fisheries. Alright, so we got how many here? As we go for the first, understand the marketing is a similarity and differences to traditional microfinance and smallholder financing. Okay, it means that before entering a new market, a microfinance or credit institution would generally conduct a market assessment which takes into account different activities and financial needs of the target market. A market assessment preferable should be beyond the fishes. This one demand side, right? Fisher is demand side. As a standalone category and look at the overall value chain weaknesses, including risk, strengths, and prospects. There are several value chains mapping resources which can be used with accessing the market needs. And we got the second one. The second one is mentioned as activities to be financed. There are a wide range of activity performed by small-scale fisheries that could be financed. These activities that they are commonly found in this group as a require, finance, and replacement. And like this, we got the third one as product design. Best practice of product design should balance needs of credits recipients against way to manage risk. Good product design will help to manage risk of non-payment. In particular, cash flows for business with erratic and uneven income and expense streams will be the primary input. Product design which does not mirror cash flow of the business or production unit. Okay, maybe it will invariably run to risk of non-payment of installment and eventually launch default. For example, financing purchase of a vessel should reflect the fact that the vessel may not go out daily for fish, or it may not be successful on a daily basis to provide a fixed installment. It sounds more Scale fisheries fishing vessels do not return to the dock for the period of time as they migrate to the fish stock and would be therefore not be able to make a regular installment. This is why it is fundamental and having to understand the needs and patterns of underlying business activity as the fishing operations. So then, now we got the fifth one, like policy and produce indifferences in clientele business activities and cash flows to require a variety of products and type of analysis. Therefore, financial institutions are moving toward separately policies and procurements for smallholder as agriculture lending. But this group as small-scale fisheries share so many of the same attribute. Financial institution would benefit from having specific policy and procedures as well as associated applications analyzed and risk checklist for small-scale fisheries finance. In the case where an institute is financing both small-scale agriculture and fisheries, these procedures could likely be consolidated. A detailed subsection in the general policies and procedures would be a starting point for inclusive finance. For small finance in fisheries section. Okay. Then we got the fifth one, marketing and promotion. Marketing and promotion as in financial service targeting in this group section of fisheries use traditional marketing methods to be material adapted to the client. Okay. Investment in marketing efforts may include using a wide variety of print and electronic media tools, even methods, brochures, posters, and newspaper advertisement, as well as radio and television spots may be used depending on literacy levels of the target population. Massive promotional effort on the part of launch officers and branch staff may also be used during market days. Right? And then we got the sixth one. Is the sixth right now we have risk assessment and credit analysis, important part of product design. Are terms and conditions surrounding risk mitigation. Only the parts of risk facing small-scale fisheries can be controlled or mentioned monitored by the financing organization. Risk which pretend to not pretend is which pertain to the operations of the business, such as technical fisheries expertise and navigation skills, cost as staff management as applicable, links to purchases, as well as assessment of the borrower's character, may be analyzed by the financial institution in determining credit worthiness. However, risk elements such as market price shifts, weather events, and accidents are more difficult to mitigate internally through the financial institution internal processes and analysis. Just this risk can be partially mitigated by integrating sales contracts, vessel insurance policies, and the third-party guarantees facilities into the mix of requirements. Okay. Then we got the seventh one, delivery channels. So here in the microfinance, alternative delivery channels are expanding the way that people access the repair credit, right? Repair credit. New delivery channels include digital disbursement and repayments via mobile phones or through agents' banking facilities. These channels can be considered by those financial of small-scale fisheries as these contribute to lowering the overall cost of the service, with the added bonus of limiting risk of non-repayment or launch diversion. And then we're going to for the launch monitoring and repayments. How? This process of the good practicing here of the launch monitoring and repayments, we adjust to the type of business financed, critical investment, whether purchase of fishing equipment, vessel and gears, oil, fuel, and ice are key points to monitor in small-scale fisheries. So this can be performed by the launch or business officer of the financial institution. Value chain actors can also play a role in monitoring, include this group: small-scale fisheries group, buyers, and input providers. Denied institutional sustainability. Here, in ordering to ensure continuity of service provision and continued access to capital, most financial institutions are required to be sustainable and profitable. Okay, profitability or cost coverage transparent when an institution creates a sufficient spread between the cost of funds and the effective yield on access. It means that this net interest spread, as it is a term, must come over operating cost, including launch losses. Consequently, we can see that the pricing side of the sustainability equation must be just like its cover cost. However, there are in situations in which a financial institution deems it is necessary to subsidize a specific product with income from another product. But these financial institutions do not always understand their product costs and therefore provide a rudimentary calculators. Like they have to be calculations as the best. Typically, interest rates are set on a relatively general conditions, usually with a risk premium to reflect risk. Okay. For the 10th last year, we have the secondary investors and their consideration as if you are investor and founders, you are the supply side, right? Okay, in this here, microfinance and credit programs and financial institution can have a variety of incentives for supporting the financing of these small-scale fisheries via financial institutions. It means that they can act as important leverage points in persuading financial institutions to enter the market by providing attractively priced funding or lending and operating cost coverage, including technology development. Okay. So concessionary funding can also be used to buy down risk through guarantee facility and technological assistance for product development, pilot implementation, and management. Again, funding, especially if accompanied by a technical assistance package, can be promote sustainable fisheries and responsibly, like sources as seafood, regardless of the objective. Best practice of support should apply to these interventions as follow. Okay. As follow. The first one is grants. The best practice are made when program subsidies or grants can the short term to be offset the cost related to the piloting products. And next, launch funds. Talking about the rule of funding that provided by central banks and other wholesalers of fund provider. And launch guarantees we got here. In required a valuable instruction of the form of guarantee. Okay, it means that she or he is a credit guarantee extended on a case-by-case basis. Okay, and they also should buy down identify risk, like matching the the structure of loan extended over the measuring of small-scale fisheries related risk. Okay. We got here. So about the key practice in delivery of financial products and services through small-scale fisheries would end up by here. Okay, and for more detail, I'm going to share you Google Drive sharing as here, and hope to see you next. Don't forget to leaving the name into the group again after listening this, and try to listen from this record. Thank you so much.